Hello, 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 everyone. How is everyone doing? Welcome, welcome, welcome. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who will be on very shortly to explain to us all about the markets and clarify everything we need to know. Good afternoon, Davey. Coco, the bottom is in. Is it a bottom or the bottom? That's what I want to know. Patrick, good afternoon. Hello, hello. Short cover rally looming. Well, we got a lot of technicals saying it's quite a possibility that we get another nice bounce. So we shall see. But Bob's going to tell us. Bob is going to tell us it's why. You need to subscribe and hit the like button and ring that bell to know when we go live and know when Bob will clarify everything for us. So let's see. Yo, Lauren. Time to buy crude oil. Road to 150. Got buy signals in crude today, too. Good afternoon, Jacob. Buy signals in crude with the decent stop, too. So, all right. We got through all the housekeeping. Come back and leave some comments. Come back and do what you can to help get this channel to 5,000 subscribers. With that, I'm bringing on Bob with the Magic Bob button. Bob, you look tired.
I am tired. I'm tired of this week.
You're not tired of Fed speak, though.
No, I'm not. I'm not. It was really funny. I was preparing for a TV spot today that happened at 2 o'clock Eastern time, and I sent out a long diatribe of notes. And one of the questions they asked me is, "Do you think 100 basis points or 75?" And I said, I'm going to stick with 75 until I see the very important Michigan sentiment figures, which Jerome Powell just basically made the most important figure on the planet. I said, I'm going to stick with 75. Um, and then the producer sent back a reply. You must have been prescient because Waller just said 75. So I didn't really see what Waller said, but I'm guessing he said 75. And then he probably said 100, and then he probably said 25 within the space of the same speech.
Hey, John. Welcome, welcome, welcome. All right, Dream. Is the bottom in, meaning we're going to new highs, or is this a short term bottom? See, I'm seeing everybody, well, I got some bullish signals today, but you know what? With everybody saying buy the dip still, I don't know.
Mm-hmm.
Uh, oh, Davey, we'll get to what's coming out, but Davey, Bob, your opinion on the run on banks in China?
So it's interesting. This is not the first time there's been a run on banks in China. There was another one in June. You might say that this is the one that started in June. So it's not really news. It's turning violent. That's news. But I don't think you'll have another Sri Lanka incident going on in China because they'll quash that shit pretty quickly.
You think?
Um, yeah. China's got some issues. Like all of the people who said that the dollar was not going to be the world's reserve currency and then the yuan was going to be, have been very quiet lately. China's over leveraged, especially in the property markets. So people are going to run to get their money, and the money's not going to be there. And China's going to say, "What are you going to do about it?" That's my opinion of it.
Well, there you go. Yeah, there's some cracks in their financial system and the property stuff. I mean, with the people refusing to pay their mortgages now and every, it
Yeah,
could
and
get very interesting.
that's the thing. I mean, they're a big part of the global economic engine. And so I had this kind of a conversation today too with Carol Roth. I don't know if you guys know who Carol Roth is. Um, she asked me about something that Larry McDonald put out in the Bear Traps report. Mike, I know you know who Larry is,
Hmm.
but he was up on Seeking Alpha, I believe. No, Zero Hedge, talking about the Fed having basically dropped a nuclear bomb on the global financial markets with these rate hikes because these rate hikes are going to absolutely crush emerging markets. And we're going to, the way Larry put it, he said, take a look at Sri Lanka and multiply it by 10. And that's what's about to happen. Now, Larry McDonald is very, very smart, and he's right a lot, just generally not within the time frame that he lists out. Right. So like this is the kind of thing that I could see Larry being right about 18 to 24 months from now. And you can't really trade that, right? You can't really look at that and say, I'm going to set up for what Larry said if it's going to happen 2 and 3 years later. That's already happening in a very small way in China. It won't get out of hand in China because their military complex is just so dominant. But this is part of it. Okay. I mean, countries are over leveraged and they still need the dollar. And now the Fed is making the dollar very valuable, and people are investing in the dollar because they know that that's the currency of the day. And they're not going to be pulling back on these rate hikes. So the dollar is likely to continue to be stronger, and that's going to really crush some of the smaller emerging markets who have borrowed in dollar denominated debt. So, we've had a pretty stable, just a relatively stable dollar over the last decade or so, relatively stable inflation. It used to be that these emerging market countries would build up dollar reserves and they would pay in dollars. Well, then they started borrowing in dollars at low interest rates to pay off some of their dollar denominated debt. And now the interest rates are higher and the dollar is stronger versus their local currencies, and they're in serious, serious trouble. China's experiencing some of that right now.
Well, I gotta say, good evening to Anissa. Thank you for
How you
being
doing,
here.
Anissa?
Rich says Bullard needs to stop talking right now.
What did Bullard say? I didn't see what Bullard said.
Oh, that was from an interview, wasn't it? That was done. We are going down the Bullard alone pumped the market. I won't be surprised when the FOMC they change it to 100 basis points. Well, you know what's interesting to me, sort of fascinating. Remember there was a debate between 50 and 75?
Mm-hmm.
And then so it was, all right, is 75 going to shock the market? Blah, 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 blah. And then we get I forgot who. It starts with an N, came out with the 100 basis point that one of those investment firms. But they said 100 basis points, and now the Fed speak has been, well, 100 basis points might shock the market, but we're all on board for 75. So maybe this is a strategy all along because now 75 is baked in.
It's normal. You know what? The Bank of Canada doing 100 really helped, because now you can see a central bank can certainly surprise and do 100. Bank of Canada is surprising a much less significant economy with 100 basis points. Kind of kicked the door open for people to believe that the U.S. Fed would do it. Canada hiked rates first, and then the U.S. got more aggressive first, and then Canada just kind of one-upped them with that 100. So it kind of it theoretically opened the door for them to do that 100, kind of kick the door open.
Theoretically, now everybody's like, hey, 75 is a done deal. No shock there.
Yeah. Remember the Fed watch tool was at 82% when we checked?
Yeah, now it's down to 41
down to
for the
60. Oh, it's 42 now?
Yeah.
So I looked earlier.
Huge reversal today because, when Waller started talking, he's like, 75 is the base case, but I could see a hike for more. And then by the end of his speech, that's when the market started dropping again. Then by the end of his speech, he's like, no, it's 75. 100 would be too aggressive. So he's like, maybe they get real-time updates. Maybe they're glancing at their phone like, oh, crap. Wait, market's tanking. Oh, I got to walk that back quickly. Because they contradict themselves. Literally, within this whole hour, he reversed his stance on, yeah, it could be 100. Nope. 75.
All right, so I'm curious as hell. What did Bullard say? Now people are saying he pumped the market.
I thought that was based off an interview, not a live speech. There's so much stuff going around now. Rich Sinks looks like the end of Europe is near. Oh boy, Rich. Will we see more than 100 in the future FOMC? I don't even know if you'll see 100. I guess, as Bob talked about, and Powell's watching consumer sentiment. We get the preliminary consumer sentiment for July tomorrow at 9. So forecasting a contraction from the previous. We'll have to see with that. And again, the big thing is also going to be Michigan inflation expectations preliminary. But we're still going to get the final number, aren't we, before they hike?
Yeah.
So this is the preliminary. We get final next Friday, don't we?
We get final next Friday, and the meeting is the 27th.
So we're going to get the final numbers, though. By the way, Retail sales, we didn't cover this yet. Retail sales tomorrow morning at 7:30 Central. And you got some pricing aspects in the Empire State Fed, but remember, retail sales are not inflation adjusted.
Right. And we've got 9.1% inflation. So a weaker number is actually a much weaker number.
So if it comes in at forecast of 0.8, but that's
Yeah.
actually with 9.1% inflation,
That's
that's
with
not good.
9.1% inflation. That's not good.
That's horrible, actually.
Yep. Yep.
So, and then if it misses to the downside, that's even going to be more horrible. More horrible. There. And then, oh, lucky us, we get Bostic speaking tomorrow before the open. Fantastic, everyone. We get more Fed speak. Then we get industrial production right before the open also. Then the last thing is the preliminary consumer sentiment. And then we can relax for the day.
Hmm.
Uh, hey, Bob, why a lot of people quitting in the office in EU?
I'm not sure I understand the question.
I don't have any context. Are just people just quitting their jobs in the EU? I do not know. Let me just go through. We're waiting for more questions. Heat map today. Some oil stocks took in the shorts, but that was a pretty substantial reversal. Banks missed again. We also banks tomorrow. Remember, we got Wells Fargo, we got Citi, we got BlackRock, not a bank, but the huge, my favorite investment firm. U.S.
Hmm.
Bank Corp, BNY Mellon. So and again, then not banks, but a one that's widely followed is UNH. I mean UHG. Sorry, United Health, and we also have PNC in the banking category. So we will get a lot more, and that's all before the open tomorrow, all before the open. So there's some potentially market moving information, but we'll see again if it's shrugged off. We'll see if the market just shrugs it off. Uh,
Real quick, I want to point out idiot Jim Cramer. Um, Today, idiot Jim Cramer, about 6 hours ago. So what would that be? About 8:30 in the morning, 8:45, something like that. West Texas Intermediate crude almost down 5% is just a remarkable collapse. Russia must be pumping an endless amount. Um,
did he call the bottom?
yeah, first of all, down 5% today. That would have been, had we ended up down there, the third day in July with down more than 5%. So I don't know why 5% today to him was a remarkable collapse. Also, the other 2 days that were more than 5% were more than 7% lower. So again, I don't know why to him today was a remarkable collapse. But if you look at the weekly on the crude oil chart, we got to the potential. So we've got a confirmed double top now, right?
Confirmed, but not
No
triggered
trade.
yet. The only way I trade that is on a weekly close, that not a daily close,
Right.
because of the way of crude is, and it's the pattern is a weekly pattern. So I'm waiting for a conservative close because there would be multiple opportunities to get into that trade.
But that's the one that's got the target somewhere around $64, $65, right?
62, actually, the full target.
Okay.
So
So anyway, just the fact that Jim Cramer was talking about I tweeted back at him. I'm like, this is literally the third time. What are you talking about? But hey, John A., clarify your question if you can before I jump off. I don't know what you mean by that.
crude oil looks bullish. There was an aggressive buy pattern this afternoon that triggered.
Hey,
So
there's something else I want to point out about CPI, Mike, if I could,
sure,
while
go
I
ahead.
see if there's any more questions.
Yeah, you have one from Anissa then coming up. So do your CPI, then
Okay,
we'll
well,
get to
I
Anissa.
talked, so I said this on a couple of interviews. So some of you who've seen those interviews might have heard me say this already, but um, post-pandemic lows on CPI May 2020, and that's the index itself, right, which sits at 296 and change. I didn't say this in the CPI broadcast, right? I don't think I had done this math. But the May 2020 296 spot 311, where is where we're at now. The low in May of 2020 was 259 or something like that. But in about 25 months, CPI rose 15.77%. That's the index itself, rose by that much, right? So that's in about 24, 25 months. Go back to February 2016 to February 2020, and the index rose 9.1%. That's 4 years. So 48 months versus 25 months. And it rose a little less than twice the pace or the rate of the 4-year period that preceded it. So what does that mean? Well, again, the CPI is an index. So the index, if we were to be flat on CPI, 0.0 for another, I'll pick a time period, year, we still over that 3-year period would have a much higher CPI than over the previous 4 years, average percentage gain, because it would remain at 15.7% from the low, right? So essentially what I've been trying to explain to people is that with real earnings up 4.4 or negative 4.4%, unless we get negative CPI, people will still be paying these higher prices and they will still be going for higher wages. They will still be going to their bosses and saying, I need a little bit more money because it's hard to make it, or they'll be getting part-time jobs or something. And with increases in things like, which I do believe I talked about on Wednesday morning, with increases in things like health insurance, which aren't going to go back down, these are going to be painful years coming up ahead with this new price regime. So even as you see crude oil drop and you see copper drop, the headline CPI number may drop, but the CPI index is going to continue to stay flat or go a little bit higher as long as there's other increases in prices. And that means consumers are going to suffer, which is part of the reason I think I'd like to see a really weak earnings season. If I had my way, I'd want a really weak earnings season and an equity sell-off during this earnings season. Then you could potentially base there and say, okay, people are struggling, but the market's got it priced in. And you might be able to start buying some things with an eye toward a longer-term hold period. So anyway, that's what I want to talk about. CPI increased over the last 25 months at a much, much higher rate than the previous 4 years and much, much quicker. So it's going to be difficult to unwind that.
Did you have any comments before we get to some more questions on PPI today?
Yeah, I mean, so PPI detached from CPI years ago. And I think it's when the transition from a manufacturing economy to a service economy became sort of the norm for the US. Producer prices includes very little inputs into the service economy, but yet you still want to see that number miss. You don't want to see it beat. You don't want to see a PPI that's as strong as it is, because it just means one more sector of the economy where prices are not going to be coming down next month. So it was not a good thing. You could make the argument that if we see producer prices start to weaken, that there's still a chance CPI will be high, but you can't make the case that producer prices with that number that's on the screen right now is going to help CPI weaken. Case can't be made, in my opinion.
Yeah, I mean that was a pretty big
It's a huge
forecast. 1.1 versus 0.8.
It's a huge beat.
So, and 11.3 year over year versus 10.7, that's massive. So that's where we sit with that. Let's see. Nisa asks, should we in the Eurozone keep our savings in US dollar or in a mix of Euro and US dollar? Thank you.
Wow, that's a really tough question. Number one, I got to throw out that Mike and I are not financial advisors. So giving him financial advice, I'm wary to do that. But I would say my initial opinion would be it depends on where you spend your money. If you're talking about your savings and you have the option to transition it into something like US dollar, you might have missed the boat already. If you look back at the euro currency, there's only been one time it's been sub parity. And that was when people weren't sure if it was going to survive or not, right? In its infancy in like 2001, 2002. We approached parity during the Greek sovereign debt crisis, but didn't spend much time at it or below it at all. I don't even know if we reached it. You look at the euro futures, and at least as of the last time I checked in the futures markets, we had not gone sub 1 yet. The low today was 1.000 in the futures market. I would look at the futures curve And I think the futures curve is probably assuming that the downside's almost over for the euro. So if you haven't switched it, I wouldn't switch it at this point. But again, not a financial advisor. It's not really a question that we should be fielding, but Anissa has been such a big supporter that I wanted to field it.
Yeah, but the curve, if you look at the forward curve, is
Yeah.
crap. I have to sort of hold on. I'm gonna take you off the screen real quick, Bob,
Okay, no problem.
because our bulbous heads are in the way. So here's the forward curve, and you see the forward curve is very steep. So again, plus this would not be the time. Oh, you're back on the screen. This would
Yeah.
not be the time. It did get to exactly parity today before the bounce, but this is not the point I'd be rotate. Again, we're not financial advisors, but I would not
Right.
be chasing the dollar higher at this point. The
Right.
it left that trade's long gone. Now the trade is watching for a more stable bottoming pattern, and you have massive cycles at the bottom on the daily and the weekly. So does this mean it turns up tomorrow? No, but I'm going to be watching for a significant bottoming play in the next couple weeks. So, that doesn't mean it's got to go get strong, but that means it could just move sideways with a slight upward bias for a bit, with the dollar starting to retract at least against the euro, not necessarily against the yen yet.
Right.
So the yen's a whole different story. Uh, where's the US 500 heading? Any thoughts on the mark, like the S&P, Bob?
Well, I think I kind of gave my thoughts. I did a Bloomberg interview yesterday, and they asked me the same question, basically, what I thought of the S&P going into earnings. And I don't really look at it that way. I mean, earnings it's just a wild card, right? So I can tell you what I would like to see happen. I would like to see stocks get pummeled during this earnings season, because then I think you could start to make a case for a fundamental bottom in stocks, because you would say, okay, stocks are starting to believe a recession. They're starting to believe that spending is going to slow because it's showing up in earnings, right? And if that's the case, then I would really start to look for technical bottoming patterns, especially for some long-term holds. But I can't tell you where it's going to go because I don't have a signal in either direction. I just have to look at the chart and say chart's still negative.
Well, long term, I'll answer that. Long term, still in sell mode. Short term,
Mm,
potential bounce mode.
there you go.
And potential bounce mode isn't for new highs. Potential bounce mode is for a bounce. And yes, you can be short term bullish and long term bearish.
All right.
Okay, because that's can be a technical setup. But again, the short term bounce I think would be a gift going into this earnings season before some of the major firms, and especially tech, which is very exposed to the dollar. We're going to see some interesting earnings results out of tech firms from my perspective. So getting a bounce before you get a lot of tech earnings could be very interesting. Uh, Bob, Yellen was out there today saying the price cap on Russian oil is one of our most powerful tools to address
Yeah.
inflation.
Okay.
Could you talk
So
about that?
so explain that to me. Um, they're going to put one of the ways they talked about putting a price cap on Russian crude oil is by going through the insurers of the ships. So I actually have some experience in that. Okay, it's a pretty pricey thing to insure a shipment of crude oil. All right, it's very pricey, and the price changes depending on where the ship is going. For example, when I worked at Tethys, we had a barge go around the Cape of Good Hope in Africa. Is that the name of the cape in Africa? I don't remember. Lower tip of Africa. Okay, I think it was called the Cape of Good Hope. Um, if you were to actually go through some of the canals and skip that area, the insurance went down dramatically. But if you went around the southern tip of Africa, those were pirate infested waters. And the price would go through the roof. And it would affect the cost of the shipment of crude oil. So Janet Yellen's plan was, it's the Horn of Africa. It's not the Cape of Good Hope. It's the Horn of Africa. If you avoid the Horn of Africa, you're good. I may have all of that wrong, but don't even worry about it. So basically, the plan was to get rid of or to cap the money by denying insurance of prices of crude oil that were gone to a certain level. So, in other words, if Russia was going to sell crude oil to India at $60 a barrel, they would only allow it to be insured at $40 a barrel or something to that effect. Russia will just insure the balance. They'll just insure the difference. We're not going to have NATO troops attacking, um, Russian crude ships. It's not going to happen. So it is one of the silliest plans I've ever heard. Is you can't cap oil. You can't cap the price of a good being sold from one country to another from the West. You can't physically do it. They'll just make the deal anyway, right? And one of the things they said, they're going to sanction the countries that buy the oil at above a certain price. So what, you're going to sanction India? We're already sanctioning China. I mean, it's the dumbest. I don't want to say it's the dumbest thing I ever heard. I mean, Kramer talked about 5% crude being a big collapse. So that's probably the dumbest thing I've ever heard.
Well,
But no,
how often do
it's
price
ridiculous.
caps work?
That's exactly it. The biggest way they
Period.
said they were going to make the price cap work was by getting rid of the insurance through the EU insurance companies, because most of those companies are in the EU. But Russia will just insure the shipments themselves. They've already said as much. That was what I said when I heard this. I'm like, how are they going to do this? Through insurance companies? And then Russia announced, we'll just insure it ourselves. We'll insure the difference. Done. Piece of cake.
It's all inane. We live in just peak stupidity in my book.
I heard one of the economists actually say that one of the best ways to curb inflation is to fund the chip building initiative and the Build Back Better plan. So, in other words, fiscal spending in order to help with inflation. They say you can't fight the Fed, but they're trying to fight the Fed, trying hard.
Shouldn't we just give everybody like gas cards and other stuff so they go out and spend more money? Isn't
By
that
the way, the price cap on Russian crude oil is one of the best ways to fight inflation by actually taking Russian crude off the market. That's how you do it. Or by lowering the price of Russian crude oil to India and China. You're going to lower the price to India and China. So they're theoretically not going to buy other crude because the Russian crude is cheaper. That's already happening. And crude's already down 16%, and you've got a 9.1 CPI. They say things because they know most people aren't paying attention. It's annoying. Sterling and I talk about this a lot.
or do they just say things because they know most people aren't smart enough to figure out anything different?
We're going to cap Russian crude oil. Okay.
Uh-huh.
I hope my neighbor comes and caps my electricity bill in the summer when I'm running the air conditioning.
That could happen.
I don't know how, but apparently you can call Janet Yellen and figure it out.
Just get a long extension cord and plug all your things into his outside outlets.
What else we got? Anything?
I don't see anything else. I'll get through some technicals then, but
I
so
wish John A would have clarified his question, but
I don't see anything unless we're not seeing the comments. Because sometimes they do freeze, and that's weird that we're not seeing the comments. Hold on.
can someone throw a test in there? Just put the
Yeah,
word
you
test
need a
in.
test. It's so aggravating when that happens. Hold on, I gotta see if it's. Let me see. I'm not seeing comments, so probably people are typing stuff. Well, let me get my link. View on YouTube. Hold on. Oh, don't do this. Give me 1 second. Test. Yeah, we're getting the comments are frozen again in uh, Ecamm. So let me see here. Let me see here. Yeah, there's been tons of stuff. That's why. All right, let me see. I don't know how to put these up here though without getting it real. Uh, All right. The next thing was from John A. I heard another person step down from the presidential office and the president of Italy decline it. I was just wondering what is happening in the EU. A lot of people are stepping down.
Well, the it'll leave conversation is happening again. What some people call the it'll exit, but I like the it'll leave better. Um, Clearly, the tension being brought on by the energy crisis in the EU is affecting other spots. You know, a lot of times politicians, and that's what they are, will resign when the going gets tough, when there's problems economically or geopolitically that they can't solve, and they just don't want to be a part of the problem anymore. It's more a symptom than an indicator. In other words, it's not clouds before the rain, it's the actual rain. So when you see resignations like this, you know the problems are going to be really tough to solve. There's no real insight into that. I mean, it was the same thing happening in the UK, right? When they wanted Boris Johnson out, that parliamentarians just started resigning, saying, "Well, I don't want to be here for the mess you've created." Same thing's happening throughout the EU right now.
All
It's
right.
just
Let's just see. I'm just looking at some other stuff to make sure. Where the stop? Where's the stop on crude oil? Let me just hit that real quick because this is good. The stop is, well, the conservative stop is on a close below today's low. The aggressive stop, if you want to look at that, remember, as I've taught before, you take this bar, and if you start getting a close on at least a 4 hour basis below about 92.90, then that's the more aggressive stop. And that would actually be right back at the trigger point for the double. Now, longer term, again, if you close below this 92.93 on a weekly basis, then I shift to bearish mode, and it longer term when it's selling the rallies. There's your answer with that. Options 22. I can't put the stuff up on the screen, sorry, but I'll just read it. Greetings from Santorini. Late to the party. Bob, you posted the oil top video. Mike, are you in agreement that oil is topped in the short term? Does a price action validate that now? We have a short term buy and no long term sell yet. We have a potential long-term sell that's been confirmed or triggered or confirmed but not yet triggered, but we have a short-term buy. So again, that would be on a short-term play to the upside. Does that roll into a larger-term play? Uh, I don't have that because that's a short-term play back to the daily rotation zone. And again, sorry everybody for the comment problem. Italy has a Christoph. Italy has a new government on average every 1.1 years.
yep.
So, Rich asked Bob, do you think crude oil will reach 150?
Uh, that's interesting. I do, but I don't think it will necessarily snap back up there. That's one of the things that I talked to a lot of the interviewers about. You know, 2 weeks ago, I told them that I had turned negative on crude oil, and that's when where was crude oil 2 weeks ago? I can't tell from this chart, but
Crude oil 2 weeks ago, what was that? Beginning of July? End of
yeah.
June? That was roughly, let's just go with 112.
All right. So I told them that I had turned negative on crude oil in the short term, but that I was positive crude oil in the long term. And that's still my stance. Crude oil can snap back. It's much more likely to snap back up than it is to snap lower. Crude oil, believe it or not, actually grinds lower and snaps higher, unlike equities. And the reason is usually some sort of supply disruption. What we're experiencing now is the perception of demand destruction with a potential global recession. So that kind of demand destruction would be a slow grind lower in prices. So yeah, I think it can go to 150, but I wouldn't call 150 looking at this chart. Certainly not.
All right. Daniel asks or says might help new people to look at the SPX monthly to find the bottom still in dive mode, and that's what I cover when we do the bigger picture stuff. I can't cover that every day. And you know my longer term, I've covered that many times with my longer term price projections being much.
Let's go back and watch one of the old videos to get a feel for it.
I'll cover that either tomorrow afternoon or Sunday. I could do it easily tomorrow afternoon. But yes, on the overall, I've talked about that many times, even on the weekly chart. I mean, come on. I mean, my next once we roll over again, my next minor target is 35.25 to about 3,500, and then if once that's broken, I mean, I could easily see this back down to 31.75 to 3,200 before we put in a long term bottom. But that doesn't mean you can't get short term rallies. And this is a super fun market to trade right now. You know, bull markets are so much easier.
I know.
But that's when everybody thinks they're a genius trader. When you just buy it pulled back, I bought it. All right, I'm not seeing any more comments, so we'll leave it at that with that, and I'll just look at the technicals.
All right. I
All
will
right.
talk to you guys next week.
Thank you, everyone, for being here. I will stay on to do the technicals. Bye, Bob.
See you guys.
All right. Little Mike coming back. There we go, Little Mike. I'll try to keep going with questions right here. It's just I actually literally have to look at the live stream on YouTube to get the questions. So, by the way, let me just hit the NASDAQ first before I get asked this. NASDAQ does have a potential 4-hour double bottom, and you might wonder why the peak is here, because of where it sits on the 1 hour. That's where you can use to confirm it. So you had that reversal pattern. We actually had a number of very strong signal setups today, but I'd be wanting the 4-hour close above that to really trigger it. And the 4-hour close on the NASDAQ is above 11,854.50. Especially since we've been generally selling down in the European session, I need a 4-hour close, and it is fighting the longer term trend. Do we have a double in the S&P? No, we don't. But cycles at the bottom in the S&P with a strong reversal signal and a 4-hour buy signal that was triggered on the close this morning with this bounce back bar. So the stop, again, the conservative stop is down here at the bottom. The aggressive stop would be on a closing basis below 37.52.25. All right, but this is for a potential return to the 50 to 62.5 area. So what are those targets? 38.23 to about 38.48. Remember, you got to close above about 38.47.75. Then statistically, we would favor a return to roughly 38.97 to 39.23. What does that mean overall? That means we watch again with the cycles at the bottom on the daily, still at the top on the weekly without rolling over yet. It could easily push back up into this weekly rotation zone before we get to the bulk of Q2 earnings. That's what I'm keeping an eye on. So don't mistake a short-term bottoming pattern for a longer-term bottom. Because that's, and we're still at so many people just buy the dip, buy the dip, buy the dip. We're not at a flush out moving. Could this be forming an even bigger channeling flag pattern with another push higher? Quite easily. By the way, here's some stuff from today. Let's just take a look at the shorter term. You had down here, this is actually a double. Okay, this was actually a double bottom reversal right here. coming off with Bullard speaking. It did come down below that 75, and you see why use the aggressive targets, because it was a pretty strong reversal, and the aggressive targets lined up with this peak right here, and you see coming up there, and then there was the little pullback continuation trade higher. Just going to recap some stuff so people can say there were some fantastic trades today. This was a double again, double top for a pullback trade, and then this was another double bottom. And then you just had the bigger continuation play higher, especially once it broke above this key level right here. Then if you look at the 37.5 harmonic, which was from these, I just had to update it to these lows. And again, that's from the highs back on July 8th to the low form today. The next major harmonic target was the 37.5, where we stalled out in the 4-hour rotation zone, and also right in the vicinity of the prior breakdown zone. There's your little area on what to watch for some trading, so you can help learn some of these patterns and incorporate it into your trading. Crude again, we already went through the stop here, but I'm now watching for a return at least to 98.85 to move up a stop, then $100, and then it's assessed there, especially with the cycles getting to the bottom. Could you see a pullback without stopping this out? Yes, because the cycles aren't to the bottom on the daily yet, but that would just be a short-term pullback. Where I'm just glancing over at the... I'm just glancing over at some things. Let me just see. Let me get through it and I'll get to the other questions. Inside bar today with notes. By the way, this double has now turned into triple, and remember, these double targets were already just for a point of reference, but since it's officially off the table, I'm still watching for a key close above this peak, 119.06. A close above that peak would then be a rotation move back up, and my first target is about 119.29 to 120, and then watching for roll that into a bigger play right there. Bitcoin bouncing back, still back in the channel, so we could easily see some higher prices, especially with the NASDAQ still moving up. Let's see. Patrick, I'm stuck with Stitch Fix at 29. What would you do if you were me? Well, this is why I stop out of things. I don't think you're ever going to get back there anytime soon. So, and this is where people try. I mean, I think Stitch Fix is going down to easily this 350 area on the next rollover play. So that's really tough because you're not getting back to 29 anytime soon. Something really has to change with the company, and remember, the company has no P/E. Why? They have no earnings. And we're going into a recessionary period. And one of the bull cases for Stitch Fix was that people weren't going out to shop because of the pandemic. So unless we get massive lockdowns again and stimulus checks and quantitative easing and everything else, this thing's not recovering anytime soon. The only thing, if you don't want to sell it because you want to hang on to stuff for tax purposes and not take the loss yet, I'd have to trade this around a core position. Which means at key buy signals, you add something and then you take them off and keep reducing your cost basis slowly until, for tax purposes, again, I'm not a financial advisor, I am a trader, so I cannot give you tax purpose stuff or tell you exactly how to manage this position, because then I'd be advising you financially. But that's the only thing for anybody caught in any stock higher. And this is why I will stress, I need to stress something to everybody who's watching this channel. Before you get into a trade or an investment is just a longer term trade. Know where your cut is know where you're wrong. If you don't know where you're wrong, you shouldn't be getting into it. Why? Because that avoids you getting into these situations. And just a rule of thumb, if you're not going to use technicals, don't risk more than 20 or 25% of any entry price. Okay? Don't risk it. It's not worth going through the bigger drawdowns because you have to recover too much of the position, especially in riskier stocks. That's just a blind rule of thumb. I mean, people who keep their stop losses 50% away from their entries, if the stock goes down 50% from where you entered, it has to rebound with 100% gain just to get you back to break even. I'm not going to sit and go through that because you could have your money tied up for a very long time. Then you have your cost of capital also. So, Connor, what patterns do you recommend learning for tops and bottoms and tops? A, double tops, double bottoms. B, head and shoulder patterns. C, I like my either spike lows or percent B buys using some Bollinger Band signals. So, I mean, you stick around here long enough, you're going to learn a number of them. Sold my IS after you announced acquisition because IS had PE. You does not. That's just me. I do in this environment. I do not like companies that got ramped up with growth that don't have price to earnings because now we're in tighter money and we're in going. At least I already think we're in a recessionary period, but it's not official. But in tighter money supply, it hampers these risk assets and it hurts companies with no earnings, especially once you start getting contraction in revenue stream, which really hurts earnings even more. So the biggest risk companies are the ones that don't even have a P to E because they have no earnings. They might make revenue, but the revenue doesn't offset the costs. And when you're in tighter capital markets, it's very difficult to come out of that and also raise substantial funds. Let's see. So Patrick, you said true. I'm sorry I can't put up these comments. I really feel bad about that. Lauren, 100%. I guess that's agreed with me. Yeah, you got. Again, I'm going to reiterate this. Know where your stop is. I don't care if it's a 5-minute trade or a potential 2-year trade. Anything can go wrong with any stock, with any company, with any trade. And you have no business being in it if you don't know where you're getting out. And don't add to losing trades. Yes, and let the winners run. If you're trading around a core position, you can still trade, but don't cannonball a trade, which means, oh, it pulled back more. I'm adding. Oh, it pulled back more. I'm adding. That is also a recommendation or a recipe for disaster. We used to call it cannonballing on the floor because a position would go back against somebody, especially one that they had too much leverage in, and they'd say, oh man, it's pulled back enough. Maybe if I just double my position right here, I can, and then all it has to do is bounce a little. And then I can get out of my trade for break even, or I can get out for this smaller loss, or I might even get out for a gain. And then it keeps going. And then why is it called a cannonball? Because imagine just somebody jumping in a pool, with that cannonball thing, off the diving board. What happens? Big splash. And that was essentially them blowing up. So don't cannonball anything. So Patrick, it says it's happening to you. Then, all right. First off, you've paid tuition to the markets. All right. So at some point, you probably will have to take a loss, and you're going to have to talk to your financial planner, financial advisor, or your accountant of when best to take that. B, take this as a lesson learned and don't repeat it. And, stay tuned to a channel like this where we stress risk risk management first. Why? Because rewards is why, trading with something with the trend. Why does that work? Let your winners run, because those are the things that take care of your losses. And keep your losses small and manage reward to risk ratio. All right. Dark screen sleep. I'm a victim of penny stocks. Don't do it. Stay away from them, guys. Again, that is not you. Again, why we don't focus on them here and why I generally criticize them is because they're a penny stock for a reason, and they're prone to pump and dump stuff, which all benefits the pumpers versus everybody who tries to chase it. And it's not a good way to trade or invest. You want good, solid companies. You want good, solid trades. Trading and investing isn't a get rich quick scheme, it's a get rich quicker. All right? And you, again, if something sounds too good to be true, it probably is. It's just like Celsius, from the crypto blow, they're going to declare bankruptcy. Well, look at that interest rates they were paying out. People put their life savings into that because they were paying these outrageous interest rates. Do you think that was sustainable? No. And now look what's happening. People are getting wiped out because of that. And they have no recourse. If it seems too good to be true, if people are talking about doubling your money overnight, yes. Can it be done? Not without taking a ton of risk. Do most people do it? No, most people blow up because most people then chase stuff lower. Even if you get in and get out for a quick win trade, they try to repeatedly do it, and it's not sustainable. And the worst thing that can happen to people is they make money the first or second time they do it and they get away with it, and then it blows up in their friggin' face, and then they end up losing far more than they've ever made. And that's one of the reasons, even on days I don't feel like doing 2 live streams a day or sometimes 3 live streams a day and then respond to comments and then field questions, is because I'm just trying to save people who are sucked in to a lot of crap that's gone on over the last few years. And even you have a lot of Wall Street traders, and I've talked about this, who think, oh, the Fed's going to save us. The Fed's going to save us. Well, they saved it for a certain number of years, but now we're in different conditions. And if the Fed steps in to save it again, yes. Could we get another massive pump to all-time highs? Yes, but then eventually when this all unravels, because you can't keep this going forever, it will devastate people. So hopefully they're not going to reverse their decisions, but you have people on Wall Street. Their whole trade is buy the dip because the Fed's going to bail us out. That's not a trading strategy. That's idiotic. So don't be one of those, and I'm talking professionals that haven't even sat through a bear market yet. And their whole thing is, well, the Fed's going to turn course. The bottom's in. You know what? We're going to new highs because the Fed's going to change course, and they're going to have to do quantitative easing and cut the rates back to 0 or negative, and then we'll go to, okay, not with 9% inflation. They're not, unless they want to blow up the whole country. All right. Patrick Lynn, I just found your channel. I should have known you earlier. Well, we've been here, and I'm glad you found the channel, and I hope you consider subscribing and coming back. And by the way, when I go on these rants, I'm not picking on anybody. I feel really bad that you've lost money. I feel really bad for you. The only thing I can say is hopefully the lesson is learned, and you, whether it's me or somebody else reputable, we're not trying to be the know-it-alls of the market. We're just trying to give people, I think, halfway decent advice, and to stress, why do you think when everybody asks, where's the stop? Where's the stop? Do I ever say, I don't know. Just get long. I don't know where a stop is. The one I'm trying to teach you through the market analysis is I come up with targets. I come up with stops. Why? Because you have no legitimate grounds to be in a trade without targets and stops. And targets can be 2 things. For new people, targets are where you either raise stops or take an action like taking partial profits, or both. That is where a target. And why do you plan these out ahead of time? So you cannot be emotional with the trade, or the investment. And yes, if it's a long-term investment, you can still have your targets. And guess what? I keep moving my stop up. I move my stop up. Why do I move my stop up? Because it's a long-term investment. And do I know necessarily where it's going to top out or get a major reversal pattern? No. But now I know if I trail a stop, again, if it does reverse, hopefully I've locked in some profits. Or, if there's some major event in the market, okay, and it comes crashing down, I'm out. All right. Let's see. Jacob, don't feel bad about paying tuition, but don't forget to learn. Yes, don't make the money you lost not worth something. Again, learning makes it worth something. And don't just sit and hope. I've talked about that with Cisco, where people are still in it from the .com. They've been in 22 years hoping it's going to come back, and it hasn't come back. Don't tie up your money. That's why I say can't tell you when to take a loss, but no, there's are times to take losses, especially if you make other gains to offset them. Daniel, love Mike's rants. He is passionate, only wants the best. I hope that comes through because I do want the best for everybody. Connor, I paid my tuition to Tesla options by not having stopped account. Found Mike because of it. Well, thank you, Connor. And again, I'm sorry you did, but I'm glad you paid your tuition and you found a different way to do something. Patrick, you're looking for Patrick. Stitch Fix Insider increased their holdings by 82% last year. Fine. Should I follow the holding? You see, you're looking for something. Again, not picking on you, but you're looking for something to never take your loss. And Stitch Fix could go a lot lower if it even remains in business long term. And you can't follow on a little company like that. Where did they increase their holdings? Yes, they might have increased it at $4, thinking they might get a bounce to $6. Is that $29? No. Have a plan. I gave you my advice. But now you need to talk from a financial planning aspect to offset other gains and everything else. You need to have a plan, and it's not just looking for a reason to keep holding. You need to come up with a plan. Hey, whatever that happened, comments back. There we go. Comments came back just in time for me to wrap up the live stream. Again. All right. Thank you, everyone, for being here. Sorry for my rant. Well, sorry, not sorry. Again, we'll be on tomorrow after retail sales, but remember, there's numbers coming out before the open and then consumer sentiment after the open. We do have some aggressive buys, but even with aggressive buys, it has to be managed from a stop perspective. Because could anything still happen in a tactile trading market? Yes, it's not a buy and hold market. You are welcome, Anissa. You are welcome, Patrick. I'm glad you like the rants, Jacob. Again, hope everyone has a peaceful evening. Please join me tomorrow on the open for rounding out the trading week. And then if you want, after the close tomorrow, we can look at some longer term stuff for longer term targets, as was suggested in the chat. I will talk to everyone later. Bye.